Hey guys, this is Mr. Roxy. I'll just stick with Mr. Roxy because that's what everybody calls me. Coming at you live from Palm Beach in Florida. It is Sunday. It is September the 26th. And today we are not going to talk about Occidental Petroleum. We are going to talk about uranium. And more specifically, we're going to focus a little bit on the uranium crash that happened in the past week, because prior to that, we were just going along hunky-dory and getting two baggers and three baggers along the way. And suddenly it all came to a dead stop. So let's explore this for a minute. And what I'm going to do is also share with you my own holdings that I have. Now, I have shared some information about my positions in uranium with you before. I also said it's highly speculative, and I would suggest or strongly suggest that if you're not following mining stocks, or if you're not prepared to do your own due diligence, you probably should stay away from these because they are highly speculative. But let's talk about the uranium squeeze. Is there actually a squeeze or not? And let's see what's going on. So a few days ago, Naha wrote in the Motley Fool, and she said, and I'm just going to go to the key points here. She said, why uranium stocks are crashing today. So obviously this is a week ago. The market sell-off is weighing on uranium stocks. That was on Monday. So the entire market crashed. And now it was suggesting that perhaps the market is crashing and the uranium stocks are just crashing along with it. We'll get more into that one in just a second. Morgan Stanley is cautious in the near term, but has strong uranium price outlooks for 2024. Of course, that's 3 years away. So this is one of those comments that will test your reserve or your fortitude. Are you prepared to hang on for 3 years? Or do you need the money now? Arguably, if you need the money now, you probably shouldn't be in the market in the first place. But the International Atomic Energy Agency believes that the world will need a lot more nuclear energy in the coming decades. Why is that? Well, we'll tell you about that in just a second as well. What happened? So Rich wrote in the Motley Fool, and he said, why Denison mines and energy fuels crashed today. And this caught my attention because I am long both Denison and energy fuels. What happened? He says, uranium mining stocks, Denison and energy fuels tumbled in Friday afternoon trading. So this is just literally before the weekend, right? So 3 days ago today, falling 7.6 and 10% respectively, despite analysts at Canaccord Genuity having just yesterday hiked the price target for Denison. So what? In a brief note on Thursday, the fly advisor Canaccord had raised its price target on Denison mine stock 20% to $3 Canadian per share. Well, price targets are price targets. If Denison goes to $3, Rich can say, hey, I was right. And if Denison goes to $1, he can just adjust his target price. So these things don't mean much in the greater scheme of things. So what happened? Canaccord did raise its price target on Denison mines 20% to Canadian $3 per share. $3 Canadian is about $2.50 US or so, in case you need to know what the exchange rate is. I think the current exchange rate is $1 buys you about $1.26 Canadian. And Canaccord reiterated its speculative buy. And this is a very important point, because if you're not prepared to be in a speculative mindset here with something like uranium, and specifically uranium miners, stay away. On Monday, Sprott Asset Management told the Financial Times that it is not attempting to corner the market on nuclear fuel. Now, some of you who've been following my channel will know that I actually got into uranium long before Sprott started making a noise in the market and created the fund, which led to a number of people saying this is going to be the great uranium squeeze. So my entry point and my cost basis is therefore really low on most of the uranium stocks that I hold. And I'll tell you about that in just a second as I get into the actual stocks. One of the reasons why Sprott said it doesn't want to corner the market or make it look like it wants to corner the market is because that might attract unwanted attention from the anti-monopoly regulators. Nonetheless, it poured cold water on investor hopes that in cornering the market, Sprott would be able to keep uranium prices moving higher. So if you are a Wall Street Bets guy, you know, or one of the Reddit meme stock followers, and you thought Sprott is going to make uranium you know, go through the roof, you were probably wrong. But anyway, Sprott is just one sort of spoke in the actual wheel that is turning uranium as a mining industry. The highlights reel here, so you can see from the graph that uranium has had a pretty good run up to here. In fact, just a month ago or so, the spot price for uranium was about $30 a pound, and now it's at about $50 a pound. So uranium prices, which had peaked to about $50 a pound before Sprott made that statement, which I just shared with you a minute ago, began falling on Monday, and at just over $48 is now down 5% from its high. 5%? Yeah, okay. Let's look at some of my stocks. So I said I would give you some more clarity on this as we go through it. So, you know, I don't remember because I haven't looked, but I can tell you sort of from memory that I first opened a position in Paladin when Paladin was trading at about 30 cents a share. So for me, that's OTC, it's PALAF, P-A-L-A-F, about 30 cents a share. You can see in this red circle at the bottom here, it hit a high of almost 80 cents. In fact, I think it hit 80 cents just a few days ago. What I did with Paladin, as I did with most of the other uranium stocks as well, my original investment into the stock, it doesn't matter what the amount is, because this is more a conceptual hypothesis rather than you know, an instructional video. But effectively what I did was this. So let's say I put $1,000 into Paladin, and then Paladin went up, and now it's trading at whatever the stock price is. And because I put in $1,000, my $1,000 is now worth, you know, $2,400. So I've got like a, you know, 2.5 bagger or whatever on that stock. I withdraw, or did withdraw, my original investment, which means I'm left with the house's money. So in my example, my position on Paladin is trading at like $2,500. I take out $1,000, which was the original amount I put in, and leave the house's money on the table, which is $1,400, and it can go wherever it goes. So when it goes up, of course, I feel happy. And when it goes down, of course, I feel sad, just like anybody else. But at the end of the day, my risk is zero because I mitigated the risk by taking my cash, my personal cash, off the table. The same with GoviEx. So you can see GoviEx hit a high of about 44 cents just a few days ago, September 15th, and now it's trading at 31. So it's, you know, it's like a mini crash in terms of where it is. But look at the year to date. It's up 72% year to date. In fact, if I go back to Paladin, it's up 165% just this year to date. How about the next one, Energy Fuels? It's only up 60% this year to date. So, you know, one thing I am not is greedy. So in this case as well, so Energy Fuels is another example where I take my personal invested portion off the table, and I leave the house's money to do whatever it does. So it's not that I have the ability to time the market. I just look at the stock and say, you know, I put in whatever, $1,000, $10,000, $100,000, doesn't matter what the amount is, it's the concept, right? So I open a position and buy the stock at whatever. Energy Fuels, I think I got into originally when it was trading at about $4, maybe 68 cents or something like that. That was my entry point in my original cost basis, but then I added a little bit more, so my cost basis changed. But you can see it hit $8.33 just a couple of weeks ago or a few days ago, and now it's trading at just $6.31, so a little mini crash as well for Energy Fuels. How about Cameco? It's up 50% year to date. Now, Cameco is actually one of those companies. This is, I think, the second largest uranium miner effectively globally. It's a Canadian company. They're headquartered in Calgary, but their largest mine is in Saskatchewan, which is one of the provinces of Canada. It hit a high of $24 just a few days ago, and now it's trading at $20. So, you know, once again, a little crash here. And I'm long Cameco. I'm actually long on all these that I'm sharing with you right now. Denison, almost the same kind of thing, not as big for me because I got in later on Denison. My cost basis, this one I hold in Canada, so my cost basis in Canadian dollars is about $1.25 or so, which is about $1 US. It's up 100% year to date, but you can see just a few days ago it was trading at $1.78, and now it's only at $1.33. What's the bear thesis? So a number of people are saying there are more than 50 new plants under construction, but there are also plants being shuttered. For example, Germany swore off all nuclear power, and there's virtually no support for nuclear in Germany. Now, I have a few followers who are from Germany, and if you guys can give us some daylight on that particular statement and tell me if my information is correct or not, I would appreciate it, so you can let us know in the comments. Uranium prices are a mix of supply and demand, pretty much the same as anything else. And for example, Cameco pulled back production in 2016, but money-losing Denison mines and NextGen Energy were, and still are, working to develop new uranium mines. That means that new sources of uranium are looming on the horizon that could leave the nuclear power industry with more than enough supply. So the concept of saying there's a squeeze because there's not enough supply to meet the market demand is something that you can probably knock a few holes into in terms of the argument, and maybe It's one way or the other, and I'm not sure which one is exactly correct. Long-term contracts might roll off before miners get a chance to replace them, and new uranium supplies create a headwind for higher commodity prices. That's a possibility. What's the bull thesis? There are currently 442 nuclear reactors in 30 countries across the world. The main countries that have the most are the United States, France, China, and Russia. In fact, China and India and Russia, I think, are building most of the new 50 that are under construction. Together, these reactors consume about 200 million pounds of uranium per year. And there are 30 new reactors under construction, as I just mentioned on the Bear Thesis, but there are also a couple of reactors that are being shuttered. There's an additional 321 reactors proposed. That is a huge number, because 321 plus 50 is almost 400, which means that's almost a doubling of the total nuclear reactors in the market today. The current supply deficit is about 20 million pounds. No one's exactly sure on that, because we don't know exactly what the current available supply is of uranium in the market. And it could reach as much as 50 million pounds, as some mining production has been suspended due to COVID. Cameco and Kazatomprom are examples of that. Prices must rise at least $50 to $60 a pound, or nations like the United States, with more than 20% of the energy generated by nuclear reactors, will leave their population without energy. I'm not too sure about that sentence, because one cannot assume that the price just has to rise, because in this particular example, the United States is one of the largest consumers of nuclear energy. So guys, that's kind of the overview, a little bit of news, my personal positions, which are all speculative in terms of where we're at and what we're doing, how I mitigated my personal risk, and the bull and the bear thesis on uranium as a potential investment. Are you in uranium? If you are, maybe share your thoughts. Let me know in the comment section what you think. I don't mind people criticizing my investment methodology here. If I have the ability to enjoy an uptick when I'm long on something, I'm not averse to taking some or even all of my money off the table and letting the house's money just do whatever it does on a go-forward basis. I have had people critiquing that and saying there are better ways to do it. Yeah, it works for me. And as I said at during the presentation, if there's one thing I'm not, it's greedy. So I always hold the philosophy that no one's ever gotten poor taking a profit. So guys, that's kind of the wrap on uranium. I'm not sure where you're at. Let me know in the comments. If you're in uranium, let me know. If you're not, don't worry. I hope you enjoyed the video. If you like my content, please subscribe, and I'll talk to you guys again soon. Bye-bye.